Everybody, it's Tuesday. Let me take these headphones out. I have no idea why I have those in. Don't need those. Welcome, everybody. It's the Tuesday edition of the Financial Thing live stream. We're talking about stocks, and we talk about cryptocurrency. We got some big news this week that I think is going to really change what's going on in the UK in regards to cryptocurrency in a good way, a really positive way. Some news out there, which I think you need to know. And it kind of goes along with what we've been talking about over the last, year, as long as I've been talking about cryptocurrency and what I feel for the future. And I think right now we're starting to see that paved roadway of the future for crypto in the UK. And it's a big one. It's very, very positive for anybody that's invest in cryptocurrency. You're going to want to hear about this. And we're going to be talking about the stock market, what's going on with the trading 212 portfolio this week, oil, energy, the stress of being invested right now. It's stressful, and I'm going to talk a little bit about that. These gray hairs are from being invested in individual stocks, which, by the way, don't ever do this. Stick to your own financial, roadmap plan. I'm taking a hyper-aggressive line on investing at the moment to take advantage of what I think is happening in the markets, but definitely not recommended for everybody. So, yes, we're going to get to, we have a ton of information to get through. Please hit that thumbs up if you can. Helps out a ton. I'm going to be showing you what losers I got rid of in the trading 212 portfolio and what was added, because I did cut some stuff this week. Welcome, Annabelle. Nyrin, ¿cómo está? From a wet and soggy Spain. That's very unusual. I thought that the rain in Spain fell really mainly on the plain. Paul Newers in Stockport, John Morgan in the Chile Swindon, Paul Bagworth in Kenilworth, Mike from a very decent Southampton. Yes, I think Southampton is decent. I spent many hours in the shopping centre there when I was younger. Peter Vincent Leatherhead. Peter, of course, always here. Dave Dawson's here for Staffordshire, our kind of dividend expert. Brian is in Woburn. Patty, a.k.a. Jeff, in France on an internet satellite dish. Maybe you'll buy the, the Starlink one day. Elon Musk. Making big plays this week, by the way. Taking a huge stake in Twitter, which was very interesting, very unexpected. I think Twitter is really becoming popular again. Well, it has been. I used to hate using Twitter, and now I find myself on there more often. I don't really like tweeting stuff, but I get a lot of information on it. So let's just get right into it, because let's try to get out of here in less than an hour. Mark Mason, better late than never, but you aren't really late, because we're just doing an intro. Hi, Aki Chap from Accrington. Nice to see you. All right. By the way, if you have not visited the Financial Thing website, you want to see what I'm up to, you can follow along the madness that is my trading and investing life. I don't even know why I put this out there, but I do. You can go right up here to the Where I Invest tab on financialthing.com, and it will show you the current stocks, share, index fund portfolio, and crypto investments. Everything is listed there. These are the trackers and the ETFs. These are the individual single stocks. And anything in bold down here is recently added positions. So, and you can see the trading 212 portfolio and the cryptocurrency coins that I own. And if you want to become a Patreon member, I list the stakes that I actually have in all of these, so you can see the allocations in the index trackers and the stocks. Crypto one is a little bit more difficult because the positions change a lot. So it's quite challenging, but all of these stock positions are listed. So just become a Patreon member. It's only £5 a month that supports the channel. Or you can become a YouTube member. Just click that little join button for a price of a Greg's sandwich and a cream cake. There you go. All right, so trading 2-on-2 portfolio has really kind of been staying a little stagnant, but it's up a little bit. I'm going to show you what's going on in the portfolio. Let me show you right here. We're sitting at about 17,665 pounds. It was over 17,850 earlier today, but we had a bit of a pullback. Very heavily invested on the phone. Not on the phone. Heavily invested in energies. And things have been going pretty good. What did I do this week? Let me show you. I got rid of some things that were in the red that I thought, well, that money could be used to put into things that I think are going to go upwards. So let's go back to the 31st of March when the changes were made. You can see here we cut loose Palantir. That was a tough one because I think this stock in the long run is going to be just fine, but I just wanted to use that money to put into another trade, so I bit the bullet on that one. That was a bit painful. £435 loss on that. Again, if that had been a long-term hold for the next 5 years, I think that stock would have been totally fine, but this is a trading account, so we try to trade and sometimes cut things loose when they are not performing well. Also sold the Hut 8 mining for £131 loss. Again, just really slow. Didn't really have much invested in it. It was again, just wanted to use that money for something else. And then we ended up buying, sold a little bit of the Laredo position for a £10 gain. But again, still got a pretty big position in Laredo Petroleum. But then we bought this Bicycle Therapeutics, which it had an earnings report today, and I was expecting a pop on that one that was pretty major, and it didn't really happen. I think it went up. Let's have a look. What did it do today? Yeah, it was up. It was up pretty good. Went from up to, I think it was up about 4%, and then everything seems to have level back down in the market. So we use that money from the Palantir and the Hut 8 losses and the capital to buy into Bicycle Therapeutics. So really sitting about even on that at the moment. Probably going to be a very short-term position. But everything else is doing pretty good. And then open this position in International Seaways. You can see right here. And then Peabody Energy. Opened a position in Peabody Energy, sold off some of this Occidental because we were in the portfolio 100% gain on it, and I just don't know how much more that has to run. Once Warren Buffett tends to get in and the price action moves up, things tend to flatten out sometimes. So again, took that money and bet it into these other two positions that I think have more of an upside swing. Again, not financial advice. And then we got this Cenovus Energy Canadian position here. It's up about 18%. So in all, and also sold off some of Vermilion VET. Again, just to take that money and to put it into these other positions. So we made some shuffles there. As a whole, I think the portfolio is looking really good. The one right now that is not doing so great is CleanSpark, but again, I have a hard time releasing that because I know the Bitcoin action price is going to eventually start exploding, and this stock will follow suit, I believe, once that happens. So why those positions on those companies? Well, obviously we've got these energy and oil stocks that continue to surge because of what's going on in Russia and the Ukraine. I don't think that is going to end anytime soon. However, you got to remember that these positions are quite risky because tomorrow or in an hour, Mr. P could say, we've decided to stop this conflict, and then I would expect oil prices could go in the negative direction. So there is a ton of risk involved in betting something on a sector like this, but this is how you gain in life. You have to take some risk sometimes if you have the stomach for it. So you can see that oil is going to keep climbing, I believe, as long as this conflict goes on. We saw that President B, Mr. Biden, said that they're going to release 180 million barrels in the U.S. of oil to help with what's going on in the markets, but I don't think this is going to change the price of gasoline in the U.S. at all. So that's going on. We have the crude oil prices still over $100 a barrel. WTI crude 102, Brent crude 107. Is that going to change? I don't think that that's going to significantly drop as long as what's going on. And then we have these natural gas prices here that are up 5.46%. So natural gas obviously on the uprise too. Energy feeling the pinch, especially in Europe. It will bleed over into the U.S., I believe, too. But for now, you can see the natural gas prices are just really going up a lot. 6.87% on the import price right now. Crazy. And then the power, you can see this electric power price down here at the bottom. This is much worse in the UK. But in the US, still continuing to rise. And as you know, the US has a domino effect on financial markets throughout the rest of the world. That's why we talk about the US a lot. Let's see what else. So, why did we buy these stocks, this International Seaways? Well, number one, they have a really cool video on their homepage. Check this out. I don't know if you can see it. It's a ship going through the Panama Canal, but no. In all seriousness, they have 87 ships that transport oil around the world, and headquartered in New York. I just think this company is going to really benefit from what's going on, and it has benefited. Took a bigger position in this stock in a different portfolio, and it's already up about 13%. You can see here, if you go to a place like Seeking Alpha, you see a lot of red here, and I don't always trust these websites. They're taking a lot of data, putting it together to give you like this overall picture, but it doesn't really give you necessarily a good picture. If you look at the quant ratings, it's saying sell. You look at the Wall Street analysts over here on the right, it's a strong buy. So these numbers, these quantitative numbers don't always add up. If you go to a website like TradingView and you look at International Seaways, see here the technicals show a buy. The analyst ratings are strong buys. But again, I do not pay any attention to this. This is just added information, maybe to show that we're on the right track. But International Seaways is definitely going to benefit, I believe, from what's going on in the oil market, especially with the clamp down on the Russian situation. More energy, oil has to be moved around the world. Companies like this tend to do well during rises in oil price, and especially cuts in production. You can also see here in the portfolio this Cenovus Energy, which is a Canadian energy company. We're up about 18%. And we see reports like this coming out. The U.S. looks to boost Canadian oil imports. So companies, that are based out in Canada, I think are less susceptible to some of the political theater that's going on around the world, especially in the U.S. about, oil releases. And I think that Canadian companies like Cenovus and CPG, which you actually cannot buy on Trading 212, but it's called Crescent Point Energy, they'll really benefit from the demand that the world is possibly going to need due to this Russian situation. As different countries decide, we just don't want to import Russian oil anymore. So those companies in countries like Canada and the US are definitely, I think, going to really benefit. And then we added Halliburton in a different portfolio. It's not showing up on here because it was in a different portfolio, but Halliburton's a very big multinational corporation. They do a lot of hydraulic fracturing and the oil services too. Actually, one of the biggest oil field service companies out there. So again, with what's going on in the oil business, these companies are all connected together and should see some real benefits in the future with what's going on. Hence this really heavy reliance on energy in the portfolio and other things. Again, it can be really stressful though, owning, stuff like this if you're investing. Again, I always say stick to the index trackers if you don't really know what's going on. You're more of an amateur. Now, I consider myself probably a well-informed amateur. I'm definitely not a professional. And I find these portfolios pretty stressful. You can see it move up and down 5, 6, 7% a day. You got to be able to strap in the seatbelt and have the stomach for that, and know the one piece of news, geopolitical, could really change the landscape for what's going on in the energy sector. Although I do think even news will take a while to filter through and actually have cause and effect on a lot of these stocks. So maybe temporarily they'll take a hit, but probably within 6 months, I think, you'll be okay. But I don't plan on being in these, these oil positions, I would say, for more than the next 6 months, because I do think the landscape will eventually change. And then we may cycle back into tech, or places where stocks have really taken a beating. It's kind of dangerous to be buying in at high points in a sector where everybody is heading into. That's what's going on with gold. If you look at Barrick Gold, we've seen a pretty big uptick down here, $18 up to 24. Everybody, gold and oil, they run together. Tend to be, if oil is doing well, gold does well. And vice versa, if oil and gold are doing bad, they both do badly together. And then when oil is not doing well, energy tech stocks seem to do well. So that's what we're doing in the portfolio. Pretty pleased. Yeah, I'm pleased with it. Again, I think there's just going to be some really good opportunities, but have to really stay abreast of what's going on and just going on in the world. Everything can really change so fast. And again, if you please, don't follow these trades. I put this out there for informational purposes only, and to show sometimes we can make bad decisions. Like, let me show you again the bad decisions. I think the Alibaba was a bad decision, even though it's come back since we sold it. I think long term it would have been a good decision, but this portfolio is not designed to be a long-term portfolio. So we took a £236 loss on Alibaba right there on the 24th of February. For the most part, it's been it's been going well, but again, don't follow these trades, please, because I certainly can get it wrong, and I have gotten it wrong. I mean, yeah, no further explanation needed on that, I don't think. Let's look at the cryptocurrency markets. See what's going on. We've seen some pretty good price action movements on Bitcoin, but the market cap is 2.1 trillion right now. It's a significant amount of money that has been invested in cryptocurrency. If you think that crypto is a small thing. I mean, we're talking about what? A gold market about, I actually don't know what it is. I think maybe 10 or 11 trillion. So crypto, for being so young, to have a $2.1 trillion of investment into it, that's what the market cap means. It's a pretty significant asset class right now. So what's going on? We've seen the two coins that have really blasted up recently, Bitcoin and Ethereum, which make up, I think, about 90% of everything I own. I think they're the two coins that staple most people's portfolio, Bitcoin being considered the safest for now. But we have seen in the last day this price action from 45,000 up to 47,000, and then it seems to be following the stock market, because the stock market was up this morning and then it took that dip back down. Almost $1 trillion fully diluted market cap and $873 billion market cap. Yeah, I'm happy. I mean, it seems to be holding well. Ethereum has a really good run up in the last 7 days, especially if you were lucky enough to get in down here at 3,200, which no one can time it, but we saw some price action as high as $3,570. So getting back towards, I mean, not there yet, this $4,800 high price point, but we're still seeing that volatility over the last year. But I think Ethereum will continue to be okay. Again, wouldn't put the entire net worth into it or anything like that in any part of these investments, stocks or cryptocurrency, but to have a piece of it is good. So we had a release from the government this week in the UK. I thought this was big news. The government has today announced moves that will see crypto stable coins recognized as a valid form of payment as part of wider plans to make Britain a global hub for crypto asset technology and investment. So, I mean, this is big news. First of all, I've said before that, the government said, well, we're not going to create our own digital currency. I think that's BS. I think for sure the UK has a digital currency. I mean, how can you release something like that, a press release saying we want to become a global crypto asset technology hub and not have your own central bank digital currency, CBDC? It doesn't make any sense. That's what I said before. So stablecoins were to be brought within regulation, paving their way for use in the UK as a recognized form of payment. And this is designed to make the UK a global hub for crypto asset technology. Measures include legislation for a financial market infrastructure sandbox to help firms innovate, and an FCA-led crypto sprint, working with the Royal Mint. Look at this. They're working with the Royal Mint to create an NFT. That really was surprising. I mean, NFTs, pretty hot September or November of last year, have kind of cooled off to a certain degree, but still hot for people who want to invest in that. We'll look at NFTs in a minute, what the hell they are, what's going on in the NFT market. But the government says is going to explore ways of enhancing the competitiveness of the UK tax system to encourage further development of the crypto asset market. And again, I've always said this, all governments give a crap about is taxation, stopping money laundering as best they can. And then they want to look good. So Rishi Sunak, Chancellor of the Exchequer, is saying all of the right things. I think it's really positive news. They're working with the Royal Mint on an NFT, a non-fungible token, this summer as an emblem of the forward-looking approach the UK is determined to take. So they're going to mint an NFT and more of a symbolic thing. Rishi Sunak said, "It's my ambition to make the UK a global hub for asset technology. The measures we've outlined today will help ensure firms can invest, innovate, and scale up in this country. We want to see the businesses of tomorrow, the jobs they create here in the UK, and by regulating," again, always talked about how the regulation will serve as a legitimacy play. By regulating effectively, we can give them the confidence they need to think and invest long term. Now, what he's essentially saying here is right now, because the crypto market is unregulated, do companies want to come in, create new businesses in the UK, knowing that it's a possibility they might get shut down due to crypto non-regulation? This is basically saying we're not going to shut down the cryptocurrency market in the UK. So you can come in, you can create your businesses. It will be regulated. It will be overwatched by the FCA. Great. And we'll try to protect consumers as best we can. But you've been given the green light as companies to come in and invest and open, which is huge. I mean, this is very, very bullish news. Rishi wants the UK financial services industry to be at the forefront of technology and innovation, the same way, with fintech and peer-to-peer lending. So what the hell are stablecoins? They're a form of crypto asset that are typically pegged to a fiat currency such as the dollar and the pound, are intended to maintain a stable value. So we're talking about things like Tether, which I'm not a fan of. USDC, here we can see that it is pretty much pegged to the US dollar. Fluctuates a little bit, tends to looks like a heartbeat or a lie detection test, right? But you can see here occasionally it'll go a little bit over $1, a little bit under. Here's the low point, 0.9984, one stable coin. And then Terra Luna has the Terra USD coin, which is $16 billion market cap. So we're going to see more introduction of regulation on these stable coins to be used as payments. That's pretty much what the government is saying. They intend to bring stable coins as a mean of payments within the regulatory perimeter, creating conditions for stablecoin issuers and service providers to operate and invest in the UK. So, obviously there'll be more British pound stable coins that will be introduced because of this. Now, this is a very important piece right here. By recognizing the potential of this technology and regulating it now, the government can ensure financial stability and high regulatory standards so these new technologies can also be used reliably and safely. I've always been saying, that's why I talk about crypto so much. Right now, crypto is still early. Think of the birth of the internet. And some of the use cases are questionable. But things like this are going to make that technology be used for a payment system, which is really where crypto shines. A lot of people don't understand that right now. They don't really understand why we need it, but it's coming. The UK's vision for being a global hub for crypto asset technology was set out in a speech by the Economic Secretary to the Treasury, John Glenn. This news here too. Glenn announced the UK will be proactively exploring the potential of the digital distributed ledger technology in the UK financial markets. Again, this is big, which enables data to be synchronized and shared in a decentralized way to potentially achieve greater efficiency and transparency and resilience. So here's the use case, for crypto, and the UK's embracing it. I think that's pretty cool. Let's do a little bit of cryptocurrency news. Mexico's third richest billionaire says, "Buy Bitcoin. Forget about selling. You'll thank me later." This is Ricardo Salinas. He's Mexico's third richest billionaire, worth about $13 billion US dollars. He says you have to buy Bitcoin, keep buying when the price is low, and then just hold your Bitcoin. Forget about selling. Trust me, you're going to thank me later. And why is he saying that? Well, it's this right here. Governments don't like Bitcoin. It burns them. That people can get out of their fiat pound or dollar trap, because that's what fiat money is. It's a fraud. And why is he saying it's a fraud? He's saying it's fake because it can just be printed more and more, and the US is a perfect example of how that is exactly the case. He says, stay away from fiat money. The dollar, the euro, the yen, or the peso, they are all the same story. It's fake money made of paper and lies. The central banks are printing more money than ever before. Invest in Bitcoin. Now, even if you don't believe in Bitcoin as an asset, what he's stating there is perfectly true. If you have something that can just be printed more and more endlessly, it really then just becomes exactly that, fake money. And Bitcoin is designed to sort of be the middle finger against that. So a nod from him. We also had Michael Saylor buying more Bitcoin. Let me pull this story up. He's bought another $190 million worth. So this maybe end up to be the most genius strategy or the crappiest strategy. Gotta look at the NASDAQ 100 down 1.9%. It was up this morning. So he bought another 4,167 Bitcoins for $190.5 million. Now he has $6 billion worth. He received a loan of $205 million last month from crypto lender Silvergate Bank to buy more Bitcoin. So, I mean, he's taking a very, very, very dangerous approach. He obviously knows what he's doing. He's leveraging against his existing Bitcoin, which is $6 billion worth, and then buying more with the loan and then paying the interest back on the loan from his assets. So it's a very risky leveraging strategy, but he's averaging about $30,000 a coin on his purchases, so it's looking pretty good right now. He's up about $15,000 on each coin, so a big bump on his investment. So it's looking good right now. I'll see if that works out for him. In the US, there is some regulatory pushes forward. This is a little bit of an old news, but I forgot to talk about it. BlockFi is a pretty big cryptocurrency company based in the US, and they reached an agreement with the US federal and state regulators outlining a clear path forward for BlockFi for Americans to earn cryptocurrency interest. So this is interest they can get from staking coins. And also they have a credit card that pays rewards on cryptocurrency. When you use the credit card, you get paid in crypto, so it's pretty good. You can get 1.5% cash back. More stuff like this is going to get introduced in Europe and the UK. People can also borrow against their cryptocurrency, right? So if you want to borrow 25 grand in US dollars, you would need to put up 1.09 Bitcoins to borrow 25 grand for as low as 4.5 APR percent. So they're offering cryptocurrency lending, and they've worked out with the regulators how that can be done legally without worrying about pissing them off, because that's one of the main things. Now, let's talk a little bit about NFTs, the non-fungible tokens that the government is working with the Royal Mint to create. An NFT is a unit of data that's non-interchangeable that's stored on a blockchain in the form of a digital ledger that can be sold or traded. It's a way of showing that you own something, basically. And there are some pretty interesting NFTs that are for sale right now. I personally don't invest in NFTs. I still struggle to see value personally. I mean, some people see value in it. Personally, I don't know if there's value in it. It seems like a lot of people just buy and sell these NFTs. But what it does do, and this is a good thing for creators, is people like this photographer in Kenya can sell his work and actually be able to make a living off it. And this is something that people like this would not have been able to do, or really struggled to make a living off something like photography. So he's able to sell his NFT his photos as an NFT, like to an original owner, for several $100s or whatever price he decides to do it. I think it's pretty cool. I like it. Again, questionable as to the value in holding something like that, but we've seen a lot of people make a lot of money off these NFTs that I think the generally older generation, my age and older, really struggle to get their heads around exactly what that means. But there are some pretty big companies that have created these NFTs. We saw a takeover of the Bored Ape Yacht Club creator. They have bought CryptoPunks and the right intellectual property rights to CryptoPunks and MeBits. And these are very, very big companies. Look at this. More than $1 billion worth of Bored Ape Yacht Club NFTs have been traded to date. And over $2.2 billion of CryptoPunk NFTs have been traded on these platforms. And that's huge. I mean, what is it really at the end of the day? It's just a piece of art. You can see the Bored Ape Yacht Clubs. Let's see if I can find it here. The floor price of one of these pieces of art is 111 Ethereum coins. So you're talking about over $300,000 just for one of these pictures, which you could literally just copy image and save on your computer. I can copy and save as, and now I own something that's 300,000, but not really. I don't really own it. And then you've got these celebrities like, see, Snoop. Mr. Snoop Dogg, the rapper, who owns his one here. And this is why this brand has become so popular and why people, have perceived value in them. There's a lot of celebrities that own these pictures. You see Justin Bieber, the pop star. He paid 500 Ethereum for his this right here, this picture. Jimmy Fallon from Saturday Night Live. Post Malone, the rapper. Neymar, the soccer player. He paid 400,000 for his. And it's just crazy. Kevin Hart, 200,000. Paris Hilton, Snoop Dogg. Yeah, and same with the CryptoPunks. You got Jay-Z, the rapper, Snoop Dogg. He's got 9, worth over $2 million. Serena Williams. And then we got some investors down here. Like this guy, Beanie Max, owns 233 of these little digital pictures that are worth over $35 million. So crazy, right? Mind-blowing to think that somebody could own $35 million of just these little digital pictures. Look at these things. This is what you own. Just a digital picture. It's pretty fascinating. I mean, the value of them is really just all demand and supply. The market could drop out of the bottom of all hell on earth on these things quickly, and they could be worth absolutely nothing. But they seem to be holding their value because of the branding and because of the value that the celebrities bring to the table. Let's have a look what else we got. Oh, one thing I wanted to mention too. In the Trading 2-1 portfolio, I missed this. We took this position in Peabody Energy. Look at that, it's up 1%. This is taking a pretty good price action run from down here. And look at this, just a year ago, this stock was priced out at $3.32 US cents. Had this big price action run. This would have been a good buying point in here, but didn't have the insight to do so. I think this is another company that has a lot of room to run over the next 6 months. A lot of bullish signals. I love the way this needle moves. If you ever want to look at stock trading charts, this is a good place tradingview.com. Oh, there was a, let me show you this too. This I had found on BlackRock's website. Now, normally I'm not a big fan of companies like this, but their analysis and their research is pretty invaluable. This is a weekly commentary that was put out on April 4th, showing the impact of the drive for the energy sector. We see the West's drive for energy security slowing the growth. Increasing inflation. By the way, inflation is expected to be about 8% in the UK coming up soon. Data last week showed US inflation at 40 years high. I don't think that that's going down. Global activity gauges this week may show how surging commodity prices are affecting global economies. Again, this just points out, why the play on the oil and commodity, energy, natural gas stocks because of this whole Ukraine situation. The West is trying to wean itself off Russian energy in the wake of the tragic war. More supply of US and other non-Russian fossil fuels will be needed to alleviate pressured consumers. Hence, Canadian companies, US offering more reinforcement in that. It's a shift in global supply, not an increase. You can see the energy prices in the EU spiking right here, starting to happen too in the US. Not as bad as back in the 1970s and 1980, but it's coming. A surge in European energy prices means the region is now spending almost a tenth of its GDP, gross domestic product, on energy, the highest since 1981. It's definitely not a good sign. What's going on in the US? Why hasn't it not been hit as hard? Well, the US economy is more energy efficient now, and they're a net exporter of energy. What does this mean for your investments? On a tactical horizon, they are underweight. This is BlackRock. It's a huge $10 trillion under management, so they know a thing or two. On a tactical horizon, we are underweight government bonds and prefer equities over credit in the inflationary environment. So obviously bonds just really not performing well. They are underweight on those. In the US, the jobs data show a robust labor market. You can see crude here. This return on oil and energy has been huge. Gold starting to eke up a little bit. And then you can see these treasury bond yields down here. Not doing so good. US equities also in the red. For the this is 2022 year to date, so we've had some struggles in the stock market, but the oil markets have done really well. European equities too, a little further in the red, and then some of these bond yields are just terrible. This is why I dumped all of the bond holdings a while ago. Living with inflation, the US Fed has projected a large and rapid increase in rates over the next 2 years. The Bank of England's hiked rates for a third time, up to, 0.75%. You're seeing savings accounts start to rise a little bit, so you're getting a little bit more money on your savings accounts. The Bank of England has signaled it may pause policy normalization on concerns about the growth outlook from spiraling energy costs. This is the conundrum that the governments are in. They don't want to put their interest rates up too high because that will stifle growth, but they're also battling with this really bad inflation problem. And if inflation rates are expected to hit 8% in the UK, putting the interest rate up 0.25% is not going to fix that at all. That's probably just going to slow down the housing market as mortgages become more expensive. Directional views. This is what BlackRock is doing. They have increased their strategic equities, so stocks and shares, to overweight in the early 2022 sell-off. Tactically, they favor developed market equities with a preference for the US and Japan over Europe. And they are overweight US equities due to strong earnings momentums and are neutral on UK equities, moderately overweight on European equities. We expect the energy shock to hit the European growth hard. And then you can see here on the bonds and things like that, that kind of meh. So I thought it was an interesting report. I'm going to link that report into the description at the end of the stream. So if you want to read it, you can. See if there's anything else. I think that was probably about it. And two, by the way, if you're a cryptocurrency holder, remember if you sell for a profit, since we are coming up to the end of the tax year, you are going to have to pay capital gains on that cryptocurrency. We'll probably do a little bit of a run through the tax next week on how you handle that. But if you do sell something for a profit, or even you convert from one coin to another, you are going to be susceptible for paying gains on that cryptocurrency. But you could also sell things for a loss too, and take that loss the same way as a stock can. So you got the plus and the negative sides of it, but don't try to evade Mr. Taxman, because he will get you eventually. Let's take one more look at the portfolio. Holding about 17,623. Peabody Energy, a little bit down on International Seaways. I was getting excited this morning. I saw it spike here. The whole market spiked, and then we lost a little bit, but not too bad. And then Bicycle was up about 6% earlier, and now is down 0.69%. So probably would have been the move to sell up here, but didn't catch it quickly enough. So, win some, you lose some. Just trying to make enough money on this portfolio to be able to donate to charity again in the future, and hopefully make some good content for you. Let's see, you got any comments? Put them in. We'll have by the way, Thursday, Stuart Law from Assets Capital, CEO, will be on the stream live, so bring your questions, your comments, your goods and your bads. He'll be here live. Excited about that. 7:30 p.m. UK time, 2:30 p.m. US Eastern. Bitcoin. Bitcoin is already being talked about. What is that? Bitcoin. Just waiting for the Funko Pops. France asked people to turn off lights yesterday due to several reactors being shut down. That's crazy. Yeah, Biden does not like that Keystone pipeline from Canada to the U.S. I think we may see one more Bank of England rate hike, and then they'll probably shut it down, but again, that's just a guess. It just doesn't, again, they're putting money in a savings account. If you're earning 1%, imagine if inflation is 8%, and you're getting 1%, no sense at all in keeping money in fiat currency anymore. It's really sad that we have to take so much risk just to stay ahead of inflation now. I mean, there was a news story. Why did I see that? Here we go. Let me show you this. U.S. inflation hits fresh decade high of 6.2% on surging energy prices. Yeah, I don't think it's going to slow down too. We're probably going to see some shortages too in some degrees. I don't know if you've noticed this, but I have not been able to get a wheat bread sandwich for a while. Ukraine is one of the big producers of wheat, and they're just not sending out wheat anymore. So Bank of England's high interest rates 3 consecutive monetary policy meetings, raising the cost of borrowing from its historic low of 0.1% to 0.7%. It looks to contain runaway inflation without stomping out economic growth. Yeah, good luck with that. It's not going to happen. I know energy prices in the UK is absolutely surging right now. Anyway, that's going to do it at 55 minutes. So hit that thumbs up if you haven't. Subscribe to the channel. Be back Thursday. Peer-to-peer lending live stream. Stuart Law from Assets Capital. Hope you enjoyed the content tonight. And you guys have a wonderful evening. Thank you for being here. Love each and every one of you. And I'll see you on Thursday. Take care. Bye.